I would tell you what I was doing in high school first, all the way till the modern day. And now it's like, it's better to say like, here's where I'm at, and then you can come join us.
Welcome to the Fully Funded Show. Whether you're a capital raiser, deal sponsor, fund manager, or LP investor, we've got the insights you need for investing success. Join Sam Silverman each week for expert interviews, insider tips, and strategies to fully fund your ventures. Let's go!
All right, we are back at the Fully Funded Show with Drew Breneman of Breneman Capital. Drew, what's going on?
Hey, Sam, thanks for having me. Happy to be here.
Yeah, you bet. So if you want to kick things off and share some of your background and kind of how you've gotten to where you are today in terms of raising money with the audience.
Yeah, sounds great. I think just to kind of tell you what we're up to today, maybe make more sense and then go back to the beginning. So yeah, I started Breneman Capital back in 2005, just when I was 19 years old, when I bought my first Duplex for $216,000. But today we work with like a wide variety of investors, or it's not just all my own money now, family offices, individuals, private equity, fund to funds. We have a $215 million portfolio, 27 properties. The portfolio pretty much has just followed where I've lived, where it was Minneapolis first, then Chicago. Then we did some deals in Phoenix, where that's the one place we bought where we didn't live. And now I live in Austin, Texas, and we're getting rolling in Texas. But bought 41 deals total, gone full cycle on 10 of them, the 24% average IRR, done 14 full cash out refis, where we bought the property and then within, a year or two refinanced out 100% of the money. So it's gone well, but it's, really, it started just with that first Duplex. And then in total, when I was in college, I had started an internet business and was looking at what to do with the money. So like a lot of people, figuring out what to invest in. So I was looking at the stock market or other things, but I really liked what real estate offered. And, everybody listening probably already knows about what's great about real estate, but I was figuring that out just as a high schooler and thought, okay, when I go to college, I'm going to invest. And I did. So I bought my first property when I was a freshman, and then I bought one a year for the rest of college. And then I had kind of invested all my own money. So then at that point, I had never thought about raising capital at that point. It's never came up. I had actually a real estate degree. I have one from UW-Madison, but it never came up about raising money like for your own deals. Really, it was more about how to value properties, appraisal, sort of, more just kind of showing you all the basics. But then most of the people, would go work somewhere after, like as an employee. So I did that. So I invested all my own money and I started working full time at a multifamily place, a development shop. But one of the interns there, he had heard my story. I told him it, and he said, "Why don't we go talk to my dad? Maybe he'd want to invest." And so I met with the dad. I had printed out a bunch of deals just off of LoopNet. This is back in 2008, and he really liked a $3 million shopping center, which I remember being surprised. So at that point, I had bought deals for $200,000 to $700,000, and I didn't know anybody who could stroke a check needed to buy a $3 million property. So I was, surprised by that, but he liked it, and we went and toured the deal. We ended up buying it, and from 2008 to 2019, we bought $100 million of property together, the three of us. And so like looking back on that, so it's, like the reason, like I had, you kind of could think, okay, that's like a lucky break of sorts, but like the reason, like we all worked together, was I already had stuff going on. So it wasn't like I went and talked to them. It was just like an idea. Hey, maybe we could start this thing and this could be my first deal together. Like this, I already had done 4 deals. They already saw what I had done. I had sold 2 of them at that point. I was working full time already in real estate. So I had like a lot of proof of concept, and the son, he also was majoring in real estate. So he knew, with like 100 other classmates, he could have introduced to his dad, and all of our coworkers were also doing the same thing I was for a living. But like the reason that I got that meeting was because I was the only one out of all those hundreds of people actually doing deals. So that's like a big takeaway just in terms of like getting started is, the most important step in all this. So it gave me.
Yeah, the law of the first deal is huge, right? Like get something done, like whatever it may be, and then go build from there. But before we dive into kind of that one big investor you've had, which is an awesome story, I want to take a step back and go through, most people I speak to, right, in this world ended up in the real estate space or the capital raising space, like myself, entirely accidentally, right? You went to school for real estate, probably one of the few people I've actually spoken to who set out saying, hey, I'm going to real estate on your own. So, one, what drove that? And then two, as a follow up, right, kind of thinking of most people who go jump into the corporate world, right? Like we can get into a little bit of the whole education piece of it here. I think that college at times can drive people to very societal norm type
For
careers,
sure.
right? So kind of help us understand, why real estate in terms of where you started out with, and like give us a contrarian take on the schooling system is how you think about that.
Yeah, I think so. Why real estate? Where I had made this money with this internet business. So I made about $100,000 as a high schooler. Some of that overlapped into my freshman year of college. So then I started reading these books on investing. So Think and Grow Rich, and Intelligent Investor, Rich Dad, Poor Dad. So I was reading a lot of these books people read when they're, probably in their 30s normally, but I'm reading them as a 16-year-old because I'm thinking, okay, I made this money and I really didn't want to squander it. Was kind of the when you're like, what was going through my head? I wanted to like take advantage of this situation. So both my parents were teachers, so we didn't have like a ton of money or anything. We were definitely not poor or anything, but it was not like it was like, this is a huge opportunity, like don't waste it. So I didn't go and buy like a used Lambo or something. I'm like, I'm gonna turn this into something. And so I first tried investing in the stock market, and then I didn't make any money doing that. And this is before smartphones and everything. So I'd try to like put on a trade, like almost like day trading, but without being there during the day. So it had no chance of working, but I would try to put on a trade. I'd go to class, I'd go to school, come back, see what happened. So that wasn't obviously working. And I just really liked how high the returns could be in real estate and the different ways you made money in it with the cash flow and obviously the buildings appreciating and the tax breaks, and then making money as the loan it gets paid off like that. Like I really liked how we were combining a business and an investment. So yeah, I didn't know a single person doing real estate, and so I started basically on the orientation day. I was thinking I would wanted to be like a doctor originally, and then I would use the money I made from that to invest in like Subway sandwich franchises. Those were really hot when I was that age. They were just booming. And the only person I had heard of who owned a Porsche, he owned 3 of those, and my friend worked for him. So I was like, that's the blueprint to being super rich, Subways, I guess. And so they were, so that's what I was thinking at the time. But then I really liked just looking at these deals. And this is very basic. Just, I didn't know anything at that point, being so brand new. But on orientation day for school, I decided, I'm going to major in business and go the real estate route, and never look back from that standpoint. And as far as school, yeah, I think what's interesting with, like it's definitely just they're gearing you to have a job. Like that's what's talked about, let's say kindergarten through 12th grade for sure. It's just, what job do you want to have? They don't know. They don't ask what business do you want to start. It's what job do you want? And you can look up, with different jobs, what they pay, and it's just about jobs. And so I think that's, so I definitely agree with what you're saying. I think that college has a lot of value, but I have like the value is different things. It's like it's networking, it's becoming an adult. It is the learning and getting ready for whatever's next, whether that's starting a business or having a job. But I think you can get the same value going to an in-state school like I did, being from Wisconsin at the time it was probably less than 10 grand a year to go for me. Actually it was like in total for everything, excluding housing. It was just, and like that, I get the same value from that as if I would have gone to a private school and it would have been 30 or 40 grand a year back then. Now it's obviously way more. So yeah, where I get worried about like higher education is people who you go out, you get history was my favorite subject, but if I got a $250,000 history degree from the 8th best school in Wisconsin, like that's a waste of money to me. But getting a real estate degree from the best school in Wisconsin for 30 grand, that makes a lot of sense. So I think it depends what you're spending. And I think when you look back on the time spent, I'm 38 now. So it's felt like kind of a long time being in school I had a lot of AP credits, so 3.5 years, but it was like, felt like this could be a waste of time. I already got my own business going. Why am I doing this? But now you're in your 30s, you're like 3 years, that's like nothing. Like it goes by fast, or 4 years or five, whatever normal. But
Yeah, it's interesting. A few points you make too, kind of tying back to you originally wanted to go to med school, right? And I think a big thing that people don't realize when looking at school is unless, this is obviously different if you have a family who's paying for it, right? Someone where it's being sponsored in that sense. But if you're looking at the standpoint of what's your opportunity cost on a personal level, assuming you're taking out debt, sacrificing years of your life, right? There's a huge opportunity cost I think people need to go think about if that makes sense for them. I think all the points you made are really valid when thinking of in-state schools can make a lot of sense, right? Going to school for something that's actually actionable, right? Versus something you actually just, feel like you enjoy or it's your favorite subject. So, I have strong views on this topic as well. I think a lot of people I've seen who go to school for 4 years and then spend, their total cost is 5, 6 times what they make their first few years in a job that has a limited ceiling. So I definitely like the alternative route, right? When I'm thinking of paying for education in spaces that are very hyper focused and actionable that give you, uncapped upside in what you're doing. So shifting gears a bit back to this big investor that you landed, right? The one guy and his son that you've done deals with for a handful of years. I think that's something that's really important to dive into as well. Like this topic is understated hugely, in my opinion, right? The law of the first deal, taking action, those people get paid. Right? Like it's a huge, huge, huge thing, right? There were how many kids in that class
I mean,
with you?
he was a year younger than me, so I didn't meet him till the job. But in the business school, I mean, there was 300 or 400 people each year. Not all of them were majored in real estate, but let's say 80 were per year. It's so there's a lot of people he could have worked with, but again, no one was doing any deals. I mean, they all, I'm sure, were plenty smart, but then there's no wagon to hitch to.
Yeah, and I've realized in this space too, right, that people who are the smartest at times are the ones who don't take enough action,
Yeah.
right? And I'm a big believer in like the people who actually take action and get stuff done are very handsomely rewarded for it, right? There's obviously guardrails you want to go have in place, but kind of help us understand like what that law of the first deal and kind of the momentum piece did for you in your business as you go forward now.
Yeah. And I think one thing that's interesting that you started touching on is really your mindset. And I don't know where it came from. I think kind of my parents were very positive. So I think it was from them building like self-confidence, but not to like a irrational level where everything I did wasn't like amazing or anything from them. But it was really my mindset. Like I always believe I could do anything I wanted. I would see others doing this, and then I figured, well, they're not really any different than me. Like I could do it too. So and I've carried that through from the beginning. Even like the first duplex. Okay, that may seem like a daunting deal if you've never done it, but like try to reframe it this way. Okay, most people, like 70% of people in the country, they eventually buy a house at some point. A duplex is not that different than a house to buy. I mean, it's 216,000, and then so like you can do it, and then there's people out there that can help you. Like I had a realtor who knew about rental properties, and a lender who did as well. And so, yeah, I think a lot of it's just your mindset. Like I had everything I needed. I already had the money for the down payment, and then then you need a realtor, a lender. Like you have everything you need. I read a couple books on how to do it, and then I did it.
Yeah, I mean, honestly, it's simple as that, right? Like, go take action, and especially you're buying this at what, 19 years old,
Yeah.
give or take. So the worst thing that happens is the deal goes under and you move on and rebuild, right? Like, I think a lot of people are so afraid of failing that they don't take action in the first place at all, right? Which clearly has paid you in spades going forward. So, when this big investor, you all do, 9 figures deals together over a period of time, right? How's your business evolved since then in terms of how you go about raising capital, right? It seems like you've got that one huge success, the one investor. That's awesome. But I think looking for the audience, these people listening are likely either LP investors, capital allocators, or deal sponsors. And when thinking of it for them is how they can go apply this, right? So one, the first investor, taking action is a huge piece. people are rewarded for taking action and having the courage to go do a deal. But now you've scaled your business since then, right? So you've raised what, $18 million from that first investor.
Yeah, correct. And then 68 million total in aggregate from everybody. And
So that 50 million is where I want to dive into a little more so, because yes, you got rewarded handsomely for taking action, but I think it's something, let's dive into things that can be more scalable for people who are listening today as well, right? The next 50 million, where did that come from? What did it look like for you in terms of going out to market, attracting capital, doing deals going forward? Let's start there.
I know where you're going. I have the ideas, but what's would be very surprising is the next investor that I found. Actually, there's, I guess, the third one. So I had someone, a regular size investor, and then the third one was even a larger investor than that one. And I know it sounds nuts, like, okay, you struck like gold, or very lucky, obviously, is like a comment I hear. But what's funny is there wasn't any luck involved. I told my story literally thousands of times to people. Here's what I'm doing. And at the time, I wasn't set up to take like $50,000 checks. It was really more like I started a company with that father who was an investor and the son. Then actually the son, he passed away in 2019. That's why that was the cutoff of our time doing deals together. He died in his like early 30s in his sleep. So I was planning on just only working with them. And then my whole like life got thrown in like a Etch-a-Sketch, basically. And there was another person I knew who was in a similar situation, very wealthy family, interested in real estate. And so I talked to them about let's just do the same thing. And let's build a portfolio together. So I know this is not scalable. I've, raised, still 20 million plus from like more just normal 50,000 kind of folks. But I think what's interesting, I wanted to touch on that, even though because the main thing is telling your story a lot, getting out there. So I could have been taking a lot of other.
So when you say telling your story, right? Like, what did that look like to you, right? In terms of, was it podcasts, was it news articles? Like, help us understand how you went out and told your story to thousands of people.
Yeah. I mean, most of it was, pretty close to like a one-on-one kind of basis where it was just everyone I told, and this is over a 10-year period. This is, before, a lot of this was before podcasts or a lot of the stuff we had, done was, a lot of, you do a deal, it ends up in the newspaper, or those like early ones I bought, I was in the student newspaper, but really it was not scalable. So this is not what is recommended, but the main thing is like, you just got to keep telling your story. And my story was about the duplexes, about the early deals. Then it was about these bigger ones. And then it was about, we've been very successful with the ones we've sold. And we've had all these refinance events where we raise the rents, we pull out all the money, we do it again. And that just repeat.
So something to dive in there. Sorry to cut you off. Something to dive in there really quickly too is your story over time changes, right?
Yeah.
Like your story as a 19-year-old kid buying his first duplex was on, okay, this guy's got ambition, he's got hustle, it's all about potential. Now that you're shifting and you're doing deals that are bigger, you got some track record, right? Like, how's your story shifting to investors or potential investors now that you've had some level of track record behind it?
Yeah, I started saying it in the opposite order, actually, where I used to say here, like I would tell you what I was doing in high school first, all the way till the modern day. And now it's like, it's better to say like, here's where I'm at. And then you can come join us just as a regular individual. And so I've flipped the order completely, where I start with results. Here are the returns. Here's the deals we've done. Here's kind of what our strategy is today. And then that's a lot faster, where now that would be if I did it the other order, could be a 20-minute story. And then we're going to be like, why are we talking about high school right now? What is this going? So like I start with what we're doing today more as a track record and company. Cause it's less about what the ambitious, 18-year-old trying to, do real estate, or the 22-year-old getting his first multi-million-dollar deal done. But it was more, so I've had to flip the order. And then if I, obviously if I could have, I'd want to change how it worked out. But if it wasn't so much more like a partnership with the two other guys, we would have done it where it would have been more scalable and we'd be set up to take like regular sized checks, but we just weren't set up that way. We had a good thing going with the three of us, and we're just more focused on reinvesting our own capital, just like a lot of, private real estate companies you see, where we started with an initial 500 grand, and then just kind of added money to it, and then we just were reinvesting our own money, and that was sort of going to be our business. But then that changed when my partner passed away.
Sure. So, all right, now present day, right? Let's talk about that 20 million that you secured from more of the standard LP, right? And this is thinking of retail investors that are writing you checks of 50 to 250 in terms of their check size, right? So 20 million there is still a great feat. Like, walk us through how you've targeted investors to kind of built up that investor base to go raise that capital as well when looking at the 20 million piece of it.
Yeah, so tried a wide variety of strategies, especially the last couple of years. So I have my own podcast. I've gone on a couple dozen other podcasts. I've ran ads on LinkedIn. I posted on every type of social media platform, just clips from my podcast or other kind of written content. And still the best way I've gotten investors is referrals. And a lot of it, like the way I view it, is you need to build a base of investors. And where that comes from doesn't matter. What in terms of this kind of my philosophy on this, whether it's from an online ad or being on a podcast or something, or your neighbor, but really where like I've been able to grow it a lot is then you get that one investor, and then it goes well, and then you ask them for referrals, and then those next ones are very easy to convert relative to the first. So yeah, I have not done a good job of developing like a here's my investor avatar, where I know you have. I've heard you go after a very specific individual in tech sales and have a great commonality with them, and I haven't developed that, because then I'm like, I've just been in real estate. So like, there's not, I do, if anything's in common, like I do, if someone went to UW Madison, or there's plenty of things we could have in common, but it's not as specific as how you've done it. It's been more broad, just kind of generically our investors. It's a lot of like old rich guys basically, but then they know people, and it's been a lot of referrals, in terms of really the people who've been like the biggest investors.
Sure. So when thinking of referrals, like, do you have a standard process you use for referrals to go ask for them, certain timing events, right? Like, what does that look like for you? So, completely agree, right? Like, your first base investors, you're scraping to get them however you can, right? Whether, whatever channel that you deem best for you. But now thinking of, you have your base, you've shown them some success, especially over a longer career as well. How do you go tap that base for referrals and also for reinvestments on their behalf as well?
Yeah, I mean, my system, if you will, is really just, if we're like, I think like a lot of this, it comes down to timing. So when I really am pushing to grow the investor base, it's when we have a deal we're raising for. So let's say we're raising $8 million for a deal, and we've got half of it raised, and we need another four. And we've kind of talked to what feels like a lot of our list. I'm going back through the list to the people that know us well enough to do this. So usually just the people who have invested, but not always. And then I'm asking, because I think it's like, if you're going to meet someone new and you have someone to show them something to show that they could invest with, that's the best time. Where otherwise there's not any urgency in terms of like, let's get this meeting, and then it's like, okay, we can do it in a month. Like, there's no urgency. So I think that's been the way it's worked the best for us, is you have a deal to show, and then there's a deadline. There's something you can, if they say yes, then there's ready, you can send the money now. Whereas it's not just, again, like an idea, like, hey, we'll have a deal, because we do like 1 to 5 deals a year. And so then that's where, that's kind of like a difficult thing to manage at times, because it's like, you meet an investor, they're interested, and it's like, great, you'll be on our list. And then, 3 months go by, and who knows where, I know, you have a fund, and I mean, that's like a great, tool for everybody, yourself included, and the people who are interested, because then they can invest immediately. So that's, at times I wonder if we should be starting a fund, because this person who says I'm interested, but I don't have anything for them. But I haven't done that yet. I think I do like the deal by deal still, not to kind of have that proverbial, like timing gun to your head.
Yeah, no, it makes a lot of sense, right? If you're truly an operator and you're only raising capital for your own deals, you will likely run into the scenario at some point in which you have interested parties that want to invest with you, or at least view investments, and you don't have a deal upcoming, right? So what we've seen as well, I'm sure, if I know you talked to me before this, you closed a few deals right at the end of the year. They happen in bunches at times too, right? You get one, you get two, you get three, right? And it kind of strings together. So something Drew's mentioning is that keeping your investors engaged over that period of time when you may not have a deal, right? To always, really hit the phones hard when you have something available is a great time, because you can have that immediate turnaround, right? If you're in sales, if you're in raising capital, it's still a sales function, and you want to be able to go sell them something, right? Have an offering for them if they're interested in doing so. So on your end, how have you managed that lull period, right? And think of a year you did one deal, right? Where you have people want to go talk to you. Typically what I've seen is that capital goes elsewhere.
Yeah, and it has. There's people who've told me I have this to invest, and then one guy I know started a wine brand, and then a lot of that money went away. And but for me, I don't. I don't want to do any bad deals. Like, I think my main goal is to do good deals, and it's as simple as that. So I don't, and since I don't raise for other people's deals, like, it's just, that's it. Like, you just got to accept it. Like, I don't want to push a subpar deal out, because then that's going to hurt your reputation, and then you're spending all this time and money running the deal and doing it, and then even just selfishly, there might not be any incentive fee for it if you would just push out a bad deal. So I really want to keep my track record and reputation great, and that's my number one priority. So I just sort of reframe my thoughts to say this is what it is. We didn't buy anything for an 18-month or so, 20-month period, 2022 to late 2023. It was painful. We're working every day and there's no new deals, and but we ended up on these last two, we grew really a lot in terms of our investor base. And if you want, I could talk where we had a lot of talk with private equity, family offices, where we went a little different direction than before. And so what we did a few things for that, where we signed up for any event we could find. There was a like any sort of family office type event, and so we signed up for the Richard Wilson. I'm blanking on that one, but what's that? Yeah, so I signed up for that, and we went to an event, and then also there's the list. So then we emailed people where it looked like we had something in common off the list. People who were in Austin or Chicago or could tell they do multifamily. There's another family office event that we went to in Chicago, one in Miami. And this was all just in a really quick period of time, because we had a live deal. And so what we did was we pitched this deal. I mean, it could have been to like 40 different family offices, or type of like big check writers, where they were saying no because it was a $7.5 million equity check and they want to be 10 million plus. But we had a live deal, and we knew this is like the time to grow. So we have two acquisitions guys, one guy who does investor relations more on the individual side, and me, like in terms of the deal doing team. And all four of us, we were just pitching this deal nonstop for like 2 months. And we've exploded our investor base for those bigger check writers, just people we had just didn't know. And then, we had something, but the key thing is we had something to show. So we're using similar tactics, but the difference with it wasn't they weren't coming in from podcasts or LinkedIn leads. They were in person, shaking hands kind of thing, or emailing off that list. And then we did land a family office who invested $3.5 million in the last deal we closed. And then that came through a different channel. They were actually going to be for a minute, we were looking at doing pref equity, which I haven't done, but I was like, let's get a quote on it. And then they ended up looking at the deal and said, we liked the deal. We would also do common equity if you want. And I was like, well, that's great. We were just looking for quotes on the pref. Like that sounds great. They liked it. And they're like, we'll just take all the money that's left, whatever it is. Like, as long as it's 2 million or more, then otherwise it's a waste of time for them. But they were, so that was great. And then that's going to be a really great relationship for us, because they they're basically like anything over $2 million. It's like this, we want to do more. And so that, so it kind of, you need to be sort of in the arena doing things. And then you get these kind of breaks, where that's where, I guess, is that another lucky break of sort, but it's like, that's because we had a deal and we're pitching it. We've got all this, we're talking to everybody. And so then you pitch your lender even on the deal, and they, so that was interesting. We met that through our senior lender. So the group doing the Fannie loan, of all places. So
very cool. Yeah, no, super helpful. So to kind of recap a few things here. One, just the power of taking action, and the law of the first deal really has helped. I think two, just looking at leveraging a huge base of referrals, right? Understanding when to ask for referrals, especially if you're going a deal by deal basis. And three, just getting in front of people as much as possible, right? In terms of people who fit that profile, whether it be family offices, whether it be an individual that you're targeting. So all huge pieces of it, right? So before we hop off here, Drew, how and why should people reach out to you if they're looking to go get connected?
Yeah, go to Breneman.com. So be like boy, RENEMAN.com. You can learn more about our company, sign up on our investor list. And then just as we said, send out the deals just as they come. We're working with fund to funds folks too now, where that's something that I didn't know existed until actually this last deal we were doing. We ran into some fund to funds folks, and they were asking would there be a better tier if we invested more? So we changed what we were offering and said, yeah, here's what it is. So we're interested in, fund to funds as well as individuals. And then if you want to follow me on LinkedIn, I try to post something every day. So just Drew Breneman on LinkedIn. And then I have my own podcast, the Breneman Blueprint, which it's more for like active, I'd say, real estate investors. Is kind of more just talking about the deals we're doing or bringing on people that I've worked with, talking about the financing environment or insurance. So it's been fun doing that as well. So
cool. Well, Drew, thanks for coming on. We'll have all that linked in the show notes as well, so everyone can go hop on there, check you out. So thanks again for coming on. It was fun.
Thank you.
Thanks for tuning in to the Fully Funded Show. If you enjoyed today's insights, hit follow, share with your investing pals, and drop us a review. Connect with us on social media for bonus content. Your success is our mission. Keep those funds flowing. See you next time.